All right.
And you're live streaming on YouTube?
Yeah, it's on YouTube.
Can you give me the link?
Sure. One sec.
Some of the questions maybe, or all right, so welcome to the webinar. We've already got 130 participants checking in here. Am I live, Dwight?
Yeah, you're live. We have 130 people in, and it's on YouTube. I sent the link in the chat.
Yeah, no, I see that. Yeah, just give me a moment. Put this over here. We got 130 participants checking in here. Am I live, Dwight?
Yeah, you're live. We have 130 people.
Okay, so let me go ahead and share my screen. So Dwight says host disabled participant screen sharing.
Or try again.
All right, just did. Okay, that sounds. All right, guys, welcome to the webinar. Welcome to the second day of the 4-day live trade execution webinar series. This is live. And I've subtitled this, How to Capitalize on Monster Moves in the Markets. My name, again, is Mark Shaws, and the Pattern Trader. Yesterday, I kind of discussed my price pattern, price action trading methodology, where I use price action. And that's the only thing I use to evaluate monster moves in the market. And I've literally taken out hundreds of thousands of dollars and even millions of dollars on individual trades, looking only at the charts that I show before you. There's nothing on the charts. I just use what's called a naked chart, where I use price and time. There's no volume, there's no moving averages, there's no Bollinger Bands, no MACD. This picture tells me a very simple story, and I'll discuss that in just a moment. This is the pound versus the yen. So Dwight, I don't see this on YouTube. Seems like maybe it hasn't caught up yet. Okay, there it is. All right, so welcome again to this webinar. Yesterday I discussed how I was short Tesla. I was also long the pound versus New Zealand. I'm short some gold. I'm short some pound yen. Cumulatively in my FX account, I'm holding profits around 50,000+. And I've given a ton back. I was short Tesla from a very good position last week at 1,150, and I violated some of my own rules, and I'm still short. Got 1,000 shares short in this account of Tesla, and I'm up about 23 grand on the position. I was up a lot more, and I'm up, and I'm also short 2,950 shares, $3 million worth of stock of Tesla, and I have $166,000 worth of profit, and also given back a hell of a lot of profit since Tesla rebounded from the 950 level just yesterday. And then pretty close to the close, I bought some puts on Roblox, ticker symbol RBLX, a stock. I'll look at that in a moment. And I think I detected a turn, so I bought the puts around 260, and they're around $3.15. So I've already got a good profit in there, but we'll see how it goes tomorrow. So I'll discuss all of this in a moment. Yesterday I showed you how I set out my emails, and then it was up 60,000 on this trade. This was Moderna. I made $340,000 or $324,000 in one day, just looking at technical price action. So these are all things where I just saw certain technical formations, jumped on these things, and this trade I made almost 7 figures in OCGN as it went from $7 to $10. I made a monster amount of money shorting QuantumScape in its stair step, fashion, from $50 to $40 to $30, and then to $20. And so this is just some of the profits that I was able to garner on some of these trades. I also trade put options, call options. These are very leveraged bets to take advantage of moves in the market. This was one of my more successful trades back in May, where I saw a potential short squeeze in Beyond Meat, bought the stock at 120, and 2 days later I got out around 155. Also bought the call options at about $1.50 and got out of those over $20. So I made about 15 to 20 times my money in about 3 days in BYND, and made about 7 figures in that. So these are just examples of different trades. These are pound New Zealand trades in an earlier time frame. And so this is what I talk about in these presentations, how I look at a very simple chart and try and extract a risk-reward relationship. And to me, it's trading is about understanding where your risk is, where the trade's going to go, what time frame. These are unknowns. The one thing we can control is our entry and our risk. And so this is the price chart of the British pound versus the Japanese yen. Not quite sure why this looks so strange, but let me just peel out of this thing. So this is the weekly. Let me go back to the daily. All right, here we are. So again, just looking at this picture, this tells me a story. Price is the news. So I'm very often asked the question, do I trade the news? And the short answer is no. To me, price, everything about this market is reflected. Whatever's going to happen monetarily out of Japan, out of the US, what have you, so this is the British pound versus Japanese yen trading pair. And it really doesn't matter what this is. This could be any chart, and I would look at the risk-reward relationship the same. This could be a chart of corn, soybean oil, natural gas, IBM stock. I would look at this thing in the same way. So it doesn't matter what you trade. You can use this kind of analysis as a weapon to determine your risk reward and entries. And so again, my whole philosophy, my objective is to take bigger moves out of the market. So when I see big moves like this, when it goes from 149 to 159, that's 1,000 pips. My whole objective is to take a piece out of the middle. I'm very good at actually getting in right at the, at the beginning. Sometimes you can't time right at the end. So if I can get 300, 400, 500 pips out of the middle of just these vast moves, I'm just trying to get a piece of the middle. Here's a double top. Here's a nice move lower. And so this is what I'm looking for. And this is very different than what most people are doing, where they're trading certainly the FX market, and they're trying to extract 7 pips or 10 pips or 15 pips or 25 pips. I get so many people tell me before they met me, they never made 100 pips on a trade, which I find quite crazy. But I think it's this short-term trading that is responsible for the reason why 90% of people are losing their money in FX. So it's not my opinion. And I believe it's well above 90%. I think because if you're, looking to make 10 pips, you have to risk 10 or 15 pips. And so you have a one-to-one risk-reward relationship. It's kind of like the casino. It's like, I used to go to the casino and lose a whole bunch of money. And now I wouldn't even touch a casino. Makes no sense to me. I can't control my risk. So if I put my chips in the middle, I'm risking my entire amount to make the same amount. And so eventually I know I'm just going to get ground down. It's the same thing. The broker is going to grind you down, right? Because, if you're, trying to, make 10 and you're risking 10, you also ought to overcome the 2 or 3 pip spread that the brokers. So here's your edge, and it's just, wiped out. And so you have to be 90% correct on all of your trades, and you're making 5, 10 trades a day, depending on, you're depending on making, money on all of these trades every day, day in and day out. It's just not going to happen. So what I look for is at least a risk reward of 3 to 1 on my trade, meaning that if I'm going to risk 50 pips, I want to see at least 150 pip outcome. So if I can't see a path where this thing is going to move in at least 150 pips, I'm just not going to put on that trade, because I'm not watching my screen trying to, extract the next 10 pips out of this trade and try and beat my broker to the punch. So I'm just looking for big moves in the markets. So that's my objective. And so that's why I look at longer term timeframes. I look at daily charts, weekly charts, monthly charts, because I'm trying to determine what is the next trajectory of the bigger move, not, some short-term scoop out. Where can I make, 150, 350, 400, 500, sometimes 800. I've made thousands of pips on an individual trade. And that's kind of unheard of in this business. And so my objective is, to look at the bigger trade. So when I look at this pound versus, you can see that basically this has been in an uptrend. But trends do end. And when they end, they put on a pattern that tells us that trends have ended and, are going to go the other way. Now, in the middle of this uptrend, you had this consolidation. You had this. So what I do is I put a boundary or structure, because if we look at prices here, looks pretty random, right? We just look at that, it's up, down, hard to make any distinction out of it. So what I try and do is put some boundaries around so I can understand it. And then once I put my structure around the prices, then I watch how markets move within the prices. So this is a descending triangle. It's descending because you can see it's made up of lower highs against a horizontal low, where all of those lows can, connect. So these patterns, this triangle is really a neutral pattern in that it could break out either way. This is can be, these are very powerful reversal patterns where, sometimes you see this and then it reverses and then it goes that way. But you can see in this case, it went the other way. It broke out and went this way. So again, what I do is I set up my structure and then I just watch how the markets play within the structure. Is it going to break lower or break higher? So you can see, and then sometimes these little guys, what I call key reversals at key areas where this made a new low and closed at the high. Now you had a whole bunch of stocks yesterday that did this, Upstart and just dozens and dozens of stocks where they made a new low, closing the high, and then today they gapped and went, much higher. So I look at the relationship on how, prices close, and you can see right here, made a new low, close at the high, made a new low, close at the high. So you can see that made a new low, close at the high. So in this area, there is very powerful support as denoted by that price action. So, when I was looking at this thing and I surmised that we were going to break, that this was going to be a continuation, that basically we would continue in the path from which, led into this pattern. And so we did have this breakout. And then, if we can look at the weekly in a moment, this was a serious resistance level on a long-term weekly chart. And it hit that level and, these relationships, there's no mistake to why it reversed here. And so now we have a new pattern where we have this double top, if you will. And double top's just what it sounds like. Basically, makes new high, backs off, and then makes another high, and then we have this M top. Now, you can see that this is asymmetrical in that this top is lower than that, but it doesn't really matter. You can have one that is lower, or you can have one where it's higher. But either way, I think we can all agree that this, when it's finished and completed, and what I mean by completed is we draw a line through that pattern, and that basically is the neckline. So when we scope back and look at this from a global point of view, I think we can all agree this looks like the letter M. It's a reversal price pattern. It's a double top. And so it's a bit asymmetrical, so it may throw you off. But to me, once you kind of cross this, and then certainly when you crossed back into this triangle, so you broke out and then you broke back in. And so you broke out here, you broke back in. And so this feels like a bull trap that anybody who chased this is now trapped up here. And now it's entered the zip code of this. And now, if you don't get out, you're trapped up here. So, bull trap is when, people chase these, new highs and then get caught as the thing reverses and turns. And so to my mind, this is an emerging, huge short opportunity. I have been short. And today we have another signal. So once I kind of determine what direction I need to be faced in, so this double top tells me that on balance, this is going to go lower. In what trajectory, what time frame, that part we don't know. But once I understand that this thing looks like it's coming down, then I look for ways to join this trade where I can understand where to hop aboard this trade and how to assess my risk. And there's a lot of unknowns, but if you can assess your entry and know your risk, that's the closest thing you're going to find to the holy grail of trading. And so the way I look for my entries is I look at for price action, where I look for what I call an insurance day bar. And an insurance day bar tells me basically where to enter the trade and what my risk is. So if I enter at 150, my risk is 151. So I've got approximately 100, 120 pips to make what could be 1,000 pip profit on this trade. So I can justify this trade. I think I will make 3 to 1, 4 to 1, 5 to 1. If I'm patient, I may even be able to make 10 to 1 on this trade. And so an insurance day bar, again, a key reversal is basically observing how prices close relative to the high and low. Didn't close right on the low, but I think we can agree that this is closer to the low than it is the high. So what this says to me is that the market tried to push prices higher. And then by the end of the day, the sellers were in control. Now, we can't look at these reversals in a vacuum. I'm looking at it in context with the pattern. So the pattern tells me the story that this thing is reversing. This tells me that we're in a downtrend and that I need to get in sync. All I'm trying to do in all of my trades is surrender to the will of the market. If you're fighting the market, then you're not getting in sync. So what I try and do is find what is the direction and try and get in the flow. And so I use these, what I call insurance day bars, because now I know where to get in. So I'll basically put a sell stop there, a pending order, and look for the market to confirm it. So really what I want to see today, if I put a sell stop underneath here, is for the market to open and actually maybe even go higher. And then 2 o'clock in the morning while I'm sleeping, whatever, this thing curls around and picks me up, then I know it's ready to go. So by putting this pending order, it puts me in at the time and price that this is ready to go. So I'm not sitting up till midnight, till my eyes bleed, waiting for some, magic moving average crossover on a 15-minute chart. I've got my pending order here, and I put it in at, 6 p.m. Eastern time. and then go about my day, have dinner, go to sleep, and then, see if I got triggered in the morning. And so this way I let the market do the work for me. And, if this market opens and goes straight up, guess what? My pending order is not triggered. No harm, no foul. I'm not put into it. I love those days where I think something's going to happen. I turn out I'm wrong, but then I don't get hurt. And so this would be my entry. And then I would put my risk. Sometimes you can, do a little, narrower, because if you see this kind of going up and failing and then putting you in, I would just put my risk right here. So, this is your entry, this is your risk, and that's what I'm looking for in my outcome. And so the whole thing is, the whole thing to my mind in trading is probing the market. Sometimes it's not going to work. But if you can understand, where to get in these things and what your risk is, and you probe around, eventually you're going to tag it. And I showed you that if you make 500 pips on a trade, you can lose a whole bunch of trades, just looking for that trade. So that, to my mind, is how I would set up this trade. I would basically put a pending order, or what's called a resting order. It just sits there, and you don't have to do anything. And that's the beauty. Trading shouldn't be an active thing. You should assess where your risk reward is, put your trade in, and walk away. If you're sitting in front of your screen for 5 hours a day, you're never going to make money. And so this would be your risk. So now I'm going to show you how actually to size your position for the correct amount of risk. We talked yesterday about this, about how to assess your risk. And so I'm going to take this hypothetical trade, which is what I would do. Let me just see what the trying to find the pound yen here, trading range today. Pound yen high was 151.11 and the low was 150.10. So let's say you put a resting order to sell it at 150 even, and you put your stop loss a little bit above the high, 150, 115. So you've got 115 pip risk. People say, well, I could never take 115 pip risk. Well, the thing is, if you do your normal position size, then you can't. So I'm going to show you how to. I'm going to put this in the chat box so you don't have to scratch around. So here's the link. And you can find a lot of these position size calculators. This one has made it much more complicated than it used to be. It used to be a lot easier. I don't know why they did what they did, but there are many other calculators. But I'm just going to show you how to size your trades correctly so that you don't get wiped out. You should never lose all of your money in the markets. And if you size your trades correctly, then you should never get wiped out. So here's the currency pair. You drop in this menu, you can see there's all the pairs here. Go up and down and figure out pound New Zealand, whatever your pair is. You can also figure out your position sizing in many international currencies around the world, depending where you are. I'm going to take a hypothetical US dollar account and a hypothetical account size of $5,000. It really doesn't matter, because it's all about what is your. So most people think about their risk in terms of pips. So they think, well, if I take a 10 pip risk or a 15 pip risk, I'm being a good boy, I'm being disciplined, I'm taking a small risk. But that's not, you have to look at what the market is telling you where to put your stop. If you're just putting an arbitrary 15 pip stop, under some moving average, that you're getting stopped out all the time and dying a death of 1,000 paper cuts. So the market told me that I should put 115 pip stop. That, based on that reversal, I should give it some latitude, some room to move, and so you don't suffocate that trade. And so basically the way you control your trade is you determine what your risk is on that trade. So depending on how much you like it, if I really like a trade, I'll put 2%, probably more into a trade. And then I'll look to build that trade. But for the sake of this, I would say you shouldn't risk more than 0.5% on any given trade. If you risk 0.5% on a trade, you could have 10 losing trades in a row and lose 5%. And you could survive that. And, that way you're not going to get wiped out. So most people are risking 3% or 5% on a trade. So if you get 5 losing trades in a row, you're already down 30%. That means you got to make 60% up just to get even again. And you're always fighting that, and you're always in a hole. So this game is all about risk and controlling your risk. So basically, to express 0.5%, you'd put 0.5. If you want to go a little higher, 1.0, you could do, 1.25. Obviously, play around whatever, you think you'd like to bet on an individual play. But for the sake of this exercise, I'm going to suggest you risk 0.5%. So in our example, I said, I would take a shot at shorting the pound yen, and I'd give it room. I'd give it, 115 pips to swing. So now to determine your trade lots, you can see that one lot equals 100,000 units, which is what's called a normal lot size. And for a normal lot size, you should have at least 25 to 50,000 in your account. Anything less, you should use a mini lot size. So mini lot size will be 1/10 of one lot, which is 0.1. And so now you just hit the calculate button, and this tells you exactly how many mini lots you can do for your given amount of risk. So this is what is going to tell you you're risking on this trade. This doesn't matter. I could risk 300 pips, or I could risk 50 pips, but my risk is always going to be 0.5%, and I'm always going to be risking $25 in my account. And guess what? This 115 pip risk, I'm wrong. Pound yen goes up 190 tomorrow. It hits your risk, the world ends, and you've lost $25 of your $5,000, and you live to fight another day. Do you understand this? Does this make sense to you? Do you have any questions about this risk calculator? So Robert Ratcliffe says this makes sense. And so this is how Henry Tan says makes sense. John, yes. So Jay, Stephen says yes. Ronnie, Michael says it's straightforward. Zia, yes, it's clear. So you should always have this by your side. You should never put on a trade where you don't understand your risk. And so if you risk 0.5%, $25 on a trade, very difficult to get wiped out. And then you can build your trades as this goes in your favor. You see another reversal, another inside day bar, you add to your trade. And so this is how the tortoise wins the race. So Marcus says, can you explain the sorting of this pair? I kind of thought I did. So again, my whole, philosophy is that I want to get in sync with the trade. I want to understand what is the direction. Where should I be facing? Where is this thing going? And you're not going to understand that by looking at a 10-minute chart. And yes, you can see double tops and double bottoms on a 10-minute chart, but basically it doesn't tell you the big picture. And so this is a daily time frame that goes back at least a year, and it gives me a global view of what's happening. If I just pull up a short-term view, I'm going to just see this thing going up and down, and it won't tell me the picture. So what I'm looking at is this pattern. This double top looks just like an M. And so this is a reversal. meaning that leading up, to this pattern was an up market. And then by seeing this reversal pattern, it tells us that this market's going to get thrown in reverse and go the other way. So now once I feel I understand what's going on here, now I want to get in sync with this market as it's likely to stair step down. You can see that there is a whole bunch of support here that it needs to get through. It bounced here, and now I think this bounce is done. And now I look at this recent price action of today, where it made a new high, and by the end of the day, the sellers were in control. So now that reversal gives me an insight on how I can hop aboard this trade and evaluate my risk. And basically, I look for the market to confirm. So the market closed at 150.36 here. I'm going to put a pending order at 150 even to sell the pound versus the Japanese yen. And then I'm going to put my stop loss above the high at 151.15. So I am risking 115 pips. Now that sounds enormous to most of you who are trading for 7 pips and 10 and 25 pips. And obviously, if you did your normal lot size where you're risking 10 pips, you couldn't risk 115 pips. So what you have to do is reduce your lot size using that risk calculator to understand how much you should be betting for your given account size. And so whenever I show people how I make enormous money on these things, they always say, well, you have a big account. I can't take advantage of these big moves because I don't have a lot of money. Well, that's crap. You can have $500 in your account. It's all about position sizing. 1% of $500 is the same as 1% of 5,000. It's the same as 1% of 50,000. It's 1%. And so this is how it's set up. And now, people say, well, where's your take profit? I always put my take profit at some arbitrary, area way out of the way. I'll put it, 145.87. I'll just pick a number out of the air, because what I want to do is I want to see now if I'm right. If this thing starts making its way, and it starts getting close to this thing, then I'll start moving my take profit lower and lower. I won't stop it from making me more money. I think I had a hypothetical, not a hypothetical, an actual trade with the pound yen not too long ago. So, and you can see this stop loss was 300 pips. So I intentionally just give it enormous amounts of room to move. And the take profit was 700 pips lower. So I put it at some arbitrary level all the way away. And now, so 143.77, where I put it over there. So now, let's see what happens. And so, then, I'll make a decision to close out the trade the same way I made it to put it on. I'll look for some pattern or price action that says, okay, this thing is, done going down for now, or I can step in and take profits. So let me just get rid of some of this noise. So the thing is, once we get under the support area of 149, it looks like it's just got endless room to roam. There's like no support anywhere, in the neighborhood of this trade. Sorry, I'm trying to just get rid of all of this noise in here. And it just takes a while to clean it up. I should have just started over again. So, once it gets under this 149, I mean, there's just enormous, there's no resistance here. I mean, no support, so this thing can just fall, who knows? But, if we start coming out of here, and I just look to see if, I'm correct. And then, at some point, maybe I see something like that, I'll take my profits, let it go higher, and then maybe, short it again or do something else. So, I'll look for the market to tell me when to get out, as much as, as well as I do when I get in. So, if I, want to pull back and understand a little bit more, I then just look at the weekly, see where, the other support, kicks in. And so you can see now that once this kind of falls out of this area, this thing has just got a lot of room where it could drop. So this is the weekly chart. And this is what I was saying, where it basically, hit this area where it hit before. It hit a massive resistance level. And now it looks like it's turning tail right at that resistance level. So you have this emerging double top on the weekly, and you can see how powerful this area is, that if it cleans through here, it could open up just a huge move lower. Natalia says, do you think that the trajectory would go intensely lower, so we should put our target price on the next? So like I said, Natalia, I just kind of put mine somewhere arbitrarily out of the way. And that trade, I think I put it around the 143, 87 area. So that's 700 pips away. And if tomorrow I wake up and it, goes down 700 pips and I get taken out, then, I get taken out and I'll say, thank you, that was a great trade. But really what I think this could be even bigger. So I put my take profit here, and then I look to see if I'm on the right track. Obviously, if the market starts going this way, then, it didn't, confirm what I thought was going to happen, and, go on to the next trade. But if we start seeing this thing start crumbling through the support, and this all of a sudden, start confirming what I'm looking at, then the more it starts diving, then, I'll, if it starts diving close to my take profit, I'll move it a little bit, I'll move it a little bit more, and I won't stop it from making me, profits, and if it keeps going on, I'll just keep moving it. So, at some point it becomes a little fluid, it becomes a little dynamic, but the idea is getting in at the right place and then, extracting a nice move. So Ziad says, I understand clearly you figure out the direction, but you often say this thing will go up or down quickly. How do you figure out the quickly part? Well, it's a function of how mature the pattern is. So if a pattern is really mature, I remember, again, on one of these webinars, when I was looking at QuantumScape, I said, basically, I guarantee you this thing will go down, from that particular point. And it's because it was at such a mature phase. So it was right there. So this was the stock of QuantumScape. And it had been, kind of so it's, sometimes, obviously the market will show its hand. But then the more mature it gets. So what I mean is, right in this time frame, this is QuantumScape, ticker symbol QS. And again, it doesn't matter what this is. It's the same analysis. So right in here, you see a giant head and shoulders price pattern. Head and shoulders, just what it looks like. It looks like a man or woman's left shoulder. The peak is the head, and that's the right shoulder. And that indicates a reversal price pattern and a market that will eventually go lower, eventually being the key part. So right here, this stock to me showed its hand. But, this is the trick in trading, is that we see these patterns, and then it can take a whole bunch of time before it actually goes in the direction that's indicated by the pattern. But this is why you have to trust the pattern. And so this, to my mind, revealed, this head and shoulders revealed that this was a bear thing and this was going to go down over time. And so there were a whole bunch of times where the market went higher, but then it formed these double tops and I got short there. And then it formed another double top here, and I got short there. And so collectively, right in this time frame, in addition to the head and shoulders, you had this large descending wedge, this large descending triangle. So this is what we saw in the pound yen. Only the pound yen, broke out this way. This broke out that way. Okay, so so it was right at this juncture, and I think, Mohammed, if you're on, or I don't know if some of you were on that webinar, I said right here, there was a key reversal where this thing made a new high and closed on the low. But what I said, this is over. This is a guaranteed trade. And I said it on the webinar, and I said, I know I shouldn't say this publicly, but there are certain times where, the risk is so clear to me. And sometimes I say, there's like no risk on this trade, which is a very dangerous thing to say. But there are certain times where the market gets to certain points where there is literally, I feel, no risk on the trade. And what I mean is that this is matured. So you saw the head and shoulders here, but then through all of this time and all of this pounding, and it gets closer and closer to the business end of this triangle, that it, now it has to do one thing or another. And so that's how I know something is going to go down. So at this juncture, I said, this is going to go down quickly. And it did. So is there any kind of questions on, any of this presentation, the pound yen? So it all comes down to the same thing for me. Pattern leads to trajectory. When I see this pattern, this is a bear price pattern. This means that whatever this instrument is going to go lower. And that's what this thing did. It dropped from, whatever this was, $70 to $20. And so it's not magic. The pattern tells you where the trajectory is. The difficulty is going through all of the noise in between before it goes. But to me, once I see the pattern, I trust the pattern. And then I look for ways to get and join this trade. So right here was another entry, which, to my mind, there was no risk. Right here, there was a mini double top here where you had two attempts right in the same area, but it was also corroborated by the price action, where in both these areas, made a new high, close on the low, made a new high, close on the low. So now you had a double top and a key reversal price action. And then it was further backed up where you had this very little inside day bar. So to me, putting a sell pending order right there, you have no risk, zero risk. There are certain times in the market where I get the feeling and I know that I have no risk, and I will put all kinds of money into a trade because I feel like the risk reward is so much in my favor. The problem now with the stock market was that you've had these huge down moves. Then today you had a big up move. And so the risk reward relationships are not that clear. You've got these big, gigantic ranges now to contend with. But there are certain times like DocuSign last week where it gets so tight and coiled up. And so if you just wait for these opportunities, there's no amount of money that you can't make. So it brings me to you saw that I bought some puts today on Roblox, and this is the idea that I sent out to our elite members tonight. Our elite program is a daily email program that our those on the elite get the heads up on what I'm doing, and it's been ridiculously successful. And if you're interested in joining the elite program after the 4-day series, I'm sure our team will contact you and let you know. That's not what I do. So this is the stock of Roblox, RBLX. It's kind of like the pound versus the Japanese yen. Same kind of trading action, but perhaps the pound versus yen is telling us, where this is going to go. So you can see that this was in this descending triangle and, had an earnings announcement, and it popped this way out of this triangle. So you can see how this is a neutral triangle. For QuantumScape, prices broke that way. In the pound, yen, and Roblox, it broke this way. So basically, I just draw my structure around prices, and then whatever they do, then I surrender to whatever they're going to do. So you can see that this thing broke out massively on good earnings out of this triangle, but has now formed what looks like a double top. This M-looking top, right? And we saw, in QuantumScape and others, that when you see this thing, it's the kiss of death. It basically says that we're going to go the other way. And so I think this is what we could be looking at. Now, this is also backed up by the fact when you look at when you dig in here and you see the price action, when this made an all-time high, it closed on the low. When this came back and retested the high, it closed on the low. So to me, when I'm looking at this pattern, I'm saying, is this, could it be? And it's backed up by the price action. And, really kind of needs to go through the neckline here to confirm it. It did. Then it kind of thrust back through the neckline. And now we're so today, just like pound yen, we have this key reversal where you went to a high earlier in the day, despite the fact that the NASDAQ was up, 500 points today and closed on the high. This closed on the low. Now, this could be a fake out. Tomorrow it could open higher and continue higher. And this is why I, require the market to confirm what I'm looking at. So in this case, I would basically sneak a sell pending order there to sell short there. And I would put my risk there. You've got a $5 risk, maybe to make, a hell of a lot more. So I just look at these risk reward relationships, these patterns. Perhaps this isn't the best one because, I always say you need a bit of room to move. So even if you're short here, it's hard to see prices falling through all of this stuff. So maybe this is not the best example, but it's just something that I'm looking at, and time will tell. We may get another move back in here where it falls short and then it goes back down. And that's probably likely what, is going to occur here. But this is starting to tell us that there is, a massive amount of resistance here, and that we should be keeping a lookout to get on the other side of this trade. So AJ says Tesla. So I made a huge miscalculation on Tesla. I think I got complacent by virtue that I got in really well. I had a massive amount of profits, and to me, I still trust this pattern. Now, prices can move huge amounts before they break out. We saw in QuantumScape. QuantumScape formed that, head and shoulders, and it had these huge moves before it actually fell out of there. And so I do feel that Tesla looks like it's put in a top. But it's not, and I was saying yesterday that the risk was very difficult to quantify, because, we put in a high up here. We had this reversal yesterday. So I had a feeling we were going to, go higher, and then there's just no way to quantify. So you kind of have to wait now for the market to sort itself out, let it stop going up. And then, maybe, on Sunday you see, this. Now you can understand, okay, if I join the trade here, I can put my risk here. But it also, and so look, first off, I should say I'm very early on trades, and this is how I've been able to make a lot of money just right on the turn. There is so much money when the market turns from one direction to another. And basically, I caught it on the turn right at the top here. That's why, I'm so complacent right now, because I shorted at 1150, and, at even at 1,050, I'm making $100, but I was making 200 yesterday. So I've given back a giant amount of money. And my whole philosophy is, if you see this kind of reversal where it makes a new low and closes on the high, you got to get out of the way of that. If you're short, just get out, let it kind of reestablish itself and find another place to get short. And I didn't do that. And so now it's up in the aftermarket again. And so I do feel like this pattern has told us that this is topped. But this could go all the way back up here. It could go to 1120 and still crap out and still be a top. And so, this is what I was saying yesterday. The markets have made such a big move one way. Now you've got some counter trend moves. And so it's kind of hard to assess in all this volatility, which way's up. And so my best trades, and I've showed you, where you get really balled up into a very tight little thing, and then you get a key reversal here, and you know exactly where your risk reward is. When you have a $200 range and it can go anywhere in here, you can't with any kind of certainty predict where it's going to go higher or lower. So for Tesla, it looks like it's going higher in the aftermarket. It's up $5 right now. It's at the highs. It could go higher. And then, I'd look to, tomorrow, if we, look like this, or you got to give this thing more time now to shake out. But I do feel that on balance that, perhaps we'll look something like that. And if I'm wrong, then, I'll get back long this thing. This is a very tricky time of the year, where portfolio managers and everybody looks to equate. So you get these massive bull moves in December, and this was an area where there was a lot of support, and I saw it and I didn't heed that, and I should have gotten out. There's just a ton of support right here, but then there's a ton of resistance. So really, you're just in the middle of the tennis court. It's flip a coin as to where this is going to go. And, this is not what I'm suggesting. I get into trades where I know exactly where to get in and what my risk is. So when I got in this trade at 1150, this was my risk, and I could live with that. And I'm still up $100, but, I'm losing more every day, giving it back. So I'm kind of still trusting that this is going to go back in the pattern, but it's, it's a terrible trade, because I look at the dance around unchanged, meaning so every day we have a high, low, and close, right? And in this case, this is a weekly chart where each one of these bars represents 1 week in time. And so last week, we went higher and we closed right on the low. And then right on the opening bell on Monday, we started going lower. And I always tell our members, don't get into a trade like that. And I'm just sick that I didn't get out of this thing when this thing turned. Because what I'm talking about is that I look at the relationship. So what I want to see in a market, if I'm short, is that I was short. So I got, in this market up here very nicely, and then it fell, closed on the low last week, and I'm all fat and happy and comfortable with my trade. And then on Monday, it basically opens and starts going lower. So when you have this big a bar, usually prices get back in the range. And so even though I was short, my hope was that this actually went higher first and then turned around, built up this energy, and then went lower. But by the time this thing opened, it had no energy. It basically fell from $1,200 all the way to $1,000. It fell 20%, at that time frame. So it stood to reason that, we were going to get some kind of, and so what happened, and I always tell our members, if you see a bar like this, don't just on Sunday night stick your order in, first thing, where the market opens lower, triggers you, and then goes lower. And then so what I look at is the relationship of this, the unchanged, where something closes. So if this thing, starts going lower, when it pulls back, now it's unchanged on the day. So now you have all of this buying thing. And now once you go through this, now you're going to be fighting that the whole time frame. So I feel like this went lower, now went higher. Now I'll be fighting it for this entire week. And I should have gotten out, and I should get out. And, I made a terrible mistake. I still have some profits, 200 grand or what have you, but I was up, probably $500,000 on this trade. And, I just got caught up in my own kind of, feeling that this is a huge parabolic move and could come down just as easily. But, it may take some time. But, if by the end of the week, we close on the high, we make this key reversal, this indicates that, you don't want to fight something like that. So this is just now in a very nebulous area. The one thing that I will say is that you'll notice that in this area, the volatility is quite a bit more. So when you see leading up to this thing, very controlled small trading ranges. But now you see these $100 a week trading ranges. And my philosophy is typically change, a spike in volatility precedes a change in direction. So to me, what this is suggesting is just heightened speculation, heightened emotion, heightened, fervor. And this is usually what precedes, a move. I called the top in gold when gold started going like this back in late last June. When the volatility started to pick up, I said, this is time to get out and let somebody else, take a turn at, the long side. So yes, Tesla is, moving. It's moving in the aftermarket now. Could move back to this 1120 or what have you, but, so we'll see. I mean, this is, a stock that's got huge momentum. It looked like it was turning, and now, we're turning back in the direction of this, huge trend. So better not to fight it. Wait for it to tell you. So, the market will tell you when it's ready to go. When the market closes on the low like this, if it goes like this and does that, then you'll know that that's ready to turn. Right now, it's just, it's a coin flip where this is going to go. So, I think, I want to talk about Roblox, and then I talked about the pound versus the yen. So I covered two pairs. So are there any questions on risk management so all of you are asking me to look at all of these different charts, and I'll look at some charts, but really what I'm trying to, reinforce is a way and approach of looking at the markets. First off, does this make sense to you? Do you see how this might be able to change your trading? You may be able to make, more money with this or keep you out of trouble. So John says yes. Simon says yes. Ziad says a lot of sense. Adam says wholly yes. Greg says yes. Stephen says all clear. Finally, thanks, Mark. Oh my God. Henry says yes. Chi. So this is really the holy. You don't have to guess. You don't have to be an MIT economist. You don't have to be some genius. Let the market tell you where it wants to go. This thing's in a giant uptrend, right? And at some point, trends do end, like quantum state. And then when they end, like the pound yen, they put on patterns that tell you that it's time to get on the other side of it.
We'll see how it goes tomorrow. I'll just.
Sorry about that. So let me see if there are any questions in the YouTube. So Matthew says, I tried this method on a 1 hour time frame and it failed. Precisely. People always ask me, can I do this on a 1 hour and 4 hour? So this is a weekly chart where each one of these price bars is 1 week, not 1 hour. But this kind of gives me an idea of what's happening here. When you look at a 1 hour, it just, it's gambling. You will see it, double top on a 1 hour to go here, and then it'll be up there, and you wonder why, because you don't understand this was in a massive uptrend. So I look at the longer time frames because I'm looking to take a piece out of the middle of big trades like this. So that's why I use the daily, the weekly, because my objective is to take out the bigger moves. If you want to just mess around and do 5 trades a day and try and pick out $5 here and $10 there, be my guest. But my inkling is you're not going to be successful over the long style. So Mr. Gorilla says, I switched my style to yours and all I do is win. Yeah, it's kind of no-brainer. I'm just trying to look at some things on YouTube. All right, so does this work on cryptos? Yeah, cryptos are, look, it works on anything. The difficulty with cryptos is that cryptos have a short history, and the history it has is, kind of all over the place. It's nothing to 20,000 back again. So, but you as more and more history comes, you can make it more effective. So let's just look at, this is Bitcoin. And so what I'm looking at on this is, I had a feeling we would come off, but now it's a question of how we hold this area. So what I'm looking at, and it's, again, with cryptos is more difficult because the history is just kind of crazy. But you can still start looking at things a certain way. So there's a certain uptrend line that comes in here. And I was looking for this thing to hold around the 42,000 area. So this is an important level. If it gets here, it needs to hold this thing intact. And it actually did bounce. It got here and now we bounced back. I think we're above 50,000 again. So we've kind of held. So this is, an area of resistance. You can see we had a head and shoulders here, and it respected that pattern. It fell out of that bear price pattern, hit this long-term uptrend line that if you were looking at an hour chart, you can't see, and then it respected that. So, I would look for a pullback there, and it should do that. On the other hand, if it, kind of comes through there, you could, go the other way. So kind of hard to tell with this asset class. It's new, it's crazy, however months and years we'll get a better picture. But there are certain areas. You can see that there was a double bottom right here. And I saw this on Ethereum at 1900. And I haven't been trading cryptos, but I wanted to buy it at 1900 and it went to 4,700 off that bottom. And Bitcoin similarly went from 30,000 to 67,000 off this double bottom. So they do put on patterns that you can see, and then prices follow. So it's like anything else. These patterns do work. And so I'm looking at the short-term pattern, and still looks like a bit of a double top, head and shoulders in here. So now we have to see if it respects the pattern. So sometimes we get what's called a busted pattern. So right here was your double top at 67,000. That told you that was the top. So when you see that, there's no surprise that we fell to 47,000. And so this whole thing looks like a bit of a double top, head and shoulders with kind of a sloping neckline. And now we're dancing right around that neckline. So now, and so this is what I do. I draw a boundary or structure around prices, and this is Bitcoin, it could be anything. And then I let the market tell me what it wants to do. So it's at a huge inflection point here, obviously, where it's either going to hit this and respect this pattern. On the other hand, if it doesn't respect this pattern, then it's called a busted pattern. It starts busting the implication of this. And so, when I was younger, I would just see this double top and say, okay, I'm going to put all my money and this thing's going to go down. Then it, goes down and then goes the other way. And I didn't understand how that happened. So now I've understood that you need to be fluid, that the markets are dynamic and fluid. The problem with expert advisors, these MetaTrader things is whatever, they're a static thing. They're built into some algorithm, but the market is a changing dynamic animal. And so what I do is I put a structure that I can understand. So this, in my mind, is a bearish price pattern. And so we should start seeing this. But on the other hand, if we start seeing this, I'll just start buying it because it's not doing this. I'll do something because it's not doing the other thing. So, we are at really a moment of truth in Bitcoin. We're on this neckline here. And, now we just sit back and see what the market does. And if it starts kind of going up and not respecting this bear pattern, then, I will buy it. Conversely, if, we start putting on a little formation here and going that way, then there's going to be another big move lower. So we are really at a big inflection point in terms of cryptos right now. Mala says, how many patterns on the market would you say what phase they're in now? Not quite sure what. I understand the question, Mala. There are thousands of stocks. There are thousands of things to look at. There are some stocks. I would say it's not a stock market. It's a market of stocks. Some are going up. Some are going down. A lot have just bounced from going down. So a lot of these NASDAQ stocks have been so beaten up that, it's not surprising you had this kind of reflexive rally just because stocks have come down so much. When you look at the indexes, they don't really tell you the real truth. So let me just flip back to this. So when you look at the triple Qs, right, or the NASDAQ, it's probably 1 or 2% off its all-time high. But if you look at dozens and dozens of NASDAQ stocks, this is what you see, where they're off 50, 70% off their highs. Zoom, Peloton, Beyond Meat, the list goes on and on and on. And so really, all you're having is a reflexive rally because look, you came off from 160 to $80. You've come off 50%, in a straight line. So it makes sense that there is a bit of a reflexive rally in the market, but don't, kid yourself. When you see this momentum, the thing is, you want to jump on whatever momentum's happening. This is still in a bear pattern. And I would look for this thing to, finish going up at some point and then jump on this bus on the downside, January or something, because this pattern, is the same as QuantumScape. It's just a different shape. It's a head and shoulders price pattern with a down sloping neckline. So this is what Bitcoin looks like, on that short-term chart. So now we see, what this market's going to do. So, we hit just, there's a huge reversal right there. So that's exactly where we grab some support. And that's why the market is supporting right now. But so it's a market of stocks where the NASDAQ and Apple and Microsoft and Google are right on their all-time highs. And most of the NASDAQ stocks are 50 to 70% lower. And I've been saying this, if you were a member of the Pattern Trader, since February. I was saying there's this second tier market that's in a bear market. Zoom, Peloton, what have you. Zoom's gone from $588 to $180. Straight down, Zoom. And I was calling this since February. I was saying this is going to get cut in half and get cut in half again, and this will probably be a $100 stock at some point. But, we found an area where it's just come down so hard. It's come down from 400 to 170, that, it's likely that we're going to get some kind of reflexive bounces in here. So now, you're looking at these counter trends where, you may get a bounce, but it's counter to the main trend. And you can do those. These counter trend, moves can be huge and very rewarding. There was a little mini double bottom and upstart yesterday, and prices have moved out of there. So again, look at this thing. It's cratered from 400 down to 150. So just makes sense that we'd have, some kind of reflex bounce. But, I keep an eye on the main pattern. So I may trade this one way for a reflex, but I'm aware that the major trend is lower. So my objective on this trade is going to be different than my objective on that trade, if that makes sense. So this to me is the pattern that's driving this thing. We see this head and shoulders, this huge gap after earnings. And once it broke this, it set in motion that. But now, we've hit this, this uptrend line. You can see you got a bit of a bear trap where anybody chasing the breakout is now trapped. And so this thing can now, go the other way. And you see that there's also a mini double bottom right here with two key reversals. So you can look at that bottom and also look at the price action. Made a new low, close at the high, made a new low, close at the high. So we can understand that this is going to be a bit of a springboard, probably to this area. So this is kind of how I look at price. Very dynamic. I'll take it down, I'll take it up, and I just look for risk reward relationships. I will get long right here after a huge move down, where you'll say, well, this is a downtrend. But if I can set up a risk reward where I know if I get long here and I put my stop here and I can take this much risk for that much reward, then I will take those trades. Greg says, after establishing your long-term analysis and key moments of reversals, do you go to a smaller? That's always a danger when if you're starting looking at a 15-minute chart to look at the reversals of where to get out. So I just, rely on these daily things. So, if you're short, and this is like the thing in Tesla, and this is where I messed up. If you're short and this is going down and down, and then you see this, then just get out of the way. When this thing makes a new low and closes on the high, start closing your shorts. If you're aggressive, you can get long, but, and this is what I didn't do with Tesla, where I saw the emergence of a big key reversal right in my face. And now I'm fighting this, I'm just giving away more and more profits every hour. And it was a rookie thing. It's something I hate to do. And, so just use the daily. So this is a daily chart. Each one of these, you can see how effective this is. You don't need to, and this makes your trading more effective. You don't have to look at every minute, wait till it closes. So I look at the relationship of the close to the high and low. And on that particular day, 2 days ago, this thing started to reverse this whole thing. Made a new low, closed on the high, the buyers were in control, and after that, it's been straight up. Now, I don't suggest that you just use a reversal in a vacuum. I use these things in connection with the pattern, the trend, and what I think is the next trajectory. Max says, do you think DocU has bottom? Probably not. You shouldn't go bottom fishing in these kind of things. There are times to do bottom fishing like an upstart. Let the market tell you. Let me see what DocU looks like. And it got so oversold in earnings. No. So I would not buy this at all. In fact, I would sell it. I would sell it. It looks like you're not going to see this high up here. So Mario, I took an extensive look at pound yen. I am bearish. I gave you a trade setup, and you can check out the replays if you missed it. And this is great help information. Darius says, how do you search for a pattern? I don't search for the pattern. The pattern just reveals itself to me. So, I've been doing this so long, I can see these things in my sleep. So this was DocuSign, last Wednesday in my early morning, what's called the boiler room sessions. I identified this trade. I told our members to get short right there as I did. And I did this because this to me was the pattern. And then there was another double top right here and a head and shoulders. So you had two bear price patterns. So that's why I say the market is ahead of the news. So I got short right here. And then on this day was an earnings after the market. So 2 days after I shorted it, there was an earnings. And no idea of, what to anticipate on the earnings, but these patterns told us which way this thing was going to go. Do you use correlations in currency trades? Chi says, no, I do not. I suggest you don't either. The markets can, get irrational. When an additional trade is made up of the risk of 0.5%, how do you maintain the 0.5%? So, you just, whatever your risk was here. So let's say you got in here and this was your risk and you risked 0.5% here. And now you're on your way and you've got all these profits and you want to add another trade right here and put your stop loss right there, then you can risk, but you've already got all of this money. So, you're not really risking that much. If you add here, put a, 0.5% risk or put your stop loss on everything right there. And, that's how you can add to your trades. You guys are welcome, Pranya and Jorgen, Don. So I'm just looking for any questions that have come through here. All right, I think I've gotten great. Do you trade options? Yes, I do trade options. I actually bought some puts on Roblox tonight. I made a ton of money in options. So for me, I buy options. So options, it's all about timing, right? You need to be right and you need to be right now. And if you're wrong, you could lose all of your money. So if I got a feeling that something's about to go and go quickly, then I'll do options. Let's see, Garvin says, do you move your stop loss into profit manually once the trade? Yeah. So, everything is, there's no computer doing this. And so there's no precise rule. The discussion of stop loss and take profit is always difficult because, every trade is different. But what I do is try and set up trades where I can identify or isolate areas of risk. So right now, Tesla, it's kind of, done this pattern, but the move has been so vast. So now you're kind of in the middle where, it could go up big, it could come down big. It's, it's hard to determine, your risk reward. If you get long, you could put a stop under today's low. If you want to get long, if you want to get short, there's kind of no way to assess your risk. When I got short here, this was my risk. So I had just such a small level of risk for such a, huge outcome. So a lot of people asking me, how do I find stocks? So there are a lot of, this is a great scanner. I'll put the link in the chat box. So you can use this to basically create a screen. So you go to screener here, and now you can, you want to do NASDAQ stocks, you want to do, healthcare, USA, shortable, price above 50, whatever you want to do. So you set up your screen and this chucks out. And then the nice thing is you can just go through these charts and, I can immediately just see something that pops out. This thing looks like it has a double top. And so I'll just focus on that, if I want to take a closer look. So I just can scroll through these very quickly. So something just popped up. So ENTA. So this thing looks like, so that just popped up. Kind of check this out. Looks like it had a bit of a double top on that screen. So this indeed is tracing out a nice double top. So I just found, a nice trade maybe to kind of check out. So again, I have no clue this company, what it does, earnings. I'm just looking at the picture. And to me, this picture is starting to tell, a pretty nasty story. This thing looks like an M top. Now, the thing is, it's, at this support level, it could play around here. So, this thing could dance in here, but it looks like eventually it's going to resolve to the downside. So, but this again is in an area where the risk reward is, a little bit tough to understand. So this is an inside bar right here. So you could basically put a pending order there to sell it there and have your risk there. So you've got a $5 stock, risk for, an unknown outcome. But this is something that, I would look at. I just think we need, probably need more time to, get through this little support area. But just going through that screener, I can find something that, may make me a lot of money. So there are thousands of charts and you can, screen to your heart's content. I spend hours and hours. So Brighton says, can I copy your trades daily? So we do have something called the Elite program where I send out my trades. And this is the format where, again, the idea is to have you understand how to make money in the financial markets yourself, right? So everybody looks at, this. And if you focus on, this, then you'll really lose sight of what, I'm trying to achieve, which is give you your own independence where you don't need me. If you understand how markets work and how these patterns evolve, and that's really what I'm trying to do. So I show you what the pattern is. I do give you a trade setup with the risk reward. Then I explain exactly what I'm looking at on the chart. And so we have a daily program where this email gets sent out every day. And Brighton, if you're interested in that, it's called the Elite program. And our team will get in contact with you if you're interested. So I think I'm going to leave it there. We still have 2 more days. I really want to thank you for attending. And we'll, commence back tomorrow, 4:30 Eastern time. And thanks a ton. I wish you a great day tomorrow. And we'll see you tomorrow. So getting tons of comments, and at some point I might ask you for a review. Tomorrow I'll give you a link to my book, and that'll really explain the process, right? So I've explained this 4-step process: identify the phase of the market, look for the pattern, look for the insurance day bar, and then layer it with an execution plan where you put a buy stop or a sell stop. And so I have a book, and tomorrow, I'll give you a link and you can check that out. So thanks a ton for checking this out. We had over 200 people on this and then also on YouTube. So fantastic turnout. Dwight, thank you for your help.
All right, Mark. See you tomorrow.
See you tomorrow.